Okay, we should be live. So I don't know if you see it in the thing or check socials to see if we are actually live, Kasim. But it says we're live on the source. I'm gonna have to let you go. Um, and then join the webinar because we gotta get started. We got 1 minute to go. And if we're live on social media, dealing with some glitches, so thank you. Okay. So let me get us live there. Hello, everybody. We are going live here. Just bear with me a second as we're just struggling with a couple of technical issues on uh, on our live streaming sessions. But we're here today to talk about source deductions on our source deduction webinar. So yes, we are live on Zoom. Kasim, can you confirm we are live on the other social media channels? And if not, go into the studio and there should be an RTMP source that you can add to the studio and then go live in the thing. So I'm going to count on Kasim to get that sorted so that I can just focus on on the content. And he says we're good. Excellent. So thank you everyone for joining us today on our webinar. If you are live with us here in Zoom, if you have any questions, if you could please use the Q&A feature as much as possible. I'll be going to that. If we've answered everything in the Q&A, then we'll go to the chat. If you are following along on social media to our live broadcast, you can answer or post your questions to whatever media you are watching it on, and we will do our best to relay those questions over to us live and answer them as we go. And if we don't get to them live, we will come back and answer them later. So please drop your comments as we go. So as I said, today's session is on source deductions, specifically geared for the type of clients that we work with, which is IT and service-based businesses that are typically owner-managers. Our mission at CPA 4IT is to help entrepreneurs organize their finances, create wealth, and transform wealth into a legacy. And today, our session is really going to be about helping you organize your finances and hopefully create a bit of wealth by maximizing your tax planning. So specifically, the agenda here is we're going to talk about payroll source deductions, what they actually are. We're going to be talking about calculating the remittance amount that you'll need to make, talk about the remitter types and their associated due dates, the various remitting methods and how you can actually pay, and how to correct any remitting errors. And then lastly, we'll give you some tools on how we can help. So without further ado, let's talk about what payroll source deductions are. So payroll source deductions are the taxes withheld by the employer and remitted to the government on behalf of their employee. So this includes tax that the individual would pay, as well as CPP and EI if it were applicable. For most of our clients, EI is not going to be applicable because they're non-arm's length employees. But certainly this is going to be your payroll taxes as well as your CPP. So remittances are the payments you actually make to the government, and they're deemed to have been made on the day in which it's actually received by the CRA. So keep in mind with a lot of banks, it typically takes at least 1 day to process a payment. So if you make a payment on the 3rd and it's due on the 3rd, the CRA may not receive that payment until the 4th, and it will be deemed to have been paid on the 4th, not the date that you made the payment on your bank. So you need to make sure that you are choosing the appropriate remittance method and the appropriate date, depending upon your due date, which we will talk about. Now, in addition to the actual remittance, there are submissions required with the CRA, specifically a PD7A is the form that you would use if you're doing an in-person payment at a bank or through mail or any type of physical interaction. If you are paying online through your bank, the form that you complete on the bank is effectively a PD7A, and you're still making a submission to the CRA, but you're doing it at the same time that you're making your payment. So they're sort of one and the same. So there's not a separate form to remit, and you don't need to have a physical copy of that form, which we will talk about. Now, the due dates for the remittance and the submissions are specific to your remitter type, and we're going to talk a little bit more about that as we go through this session so that you're aware of the deadlines. Generally speaking, we are always going to err on the most conservative side, and we're going to give you deadlines based on the most conservative remitter type, even if you have a remitter type that might not be due until a few days later. And we'll talk about that as we go. So the first question is, do you need to be here today? And is this source deduction planning applicable to you? So if you're a client of ours and you are new to this is your first year, what you want to figure out is whether you've taken out any money from your corporation for which you've not already declared a salary or a dividend. Now, some companies will use a payroll software like WagePoint or ADP to make regular payroll remittances as well as regular payroll payments to the employees, which might happen to be themselves. In which case, if you're doing that, you probably do not need to do this. But a lot of our clients, what they do is the money they take out of their corporation is a loan from their corporation so that they can pay for expenses on behalf of the corporation. At the end of the year, we need to look at how much money corporation has loaned them and determine a salary or a dividend based on the amount of money that they've loaned. So the first question is, have you taken money out of your corp for which you have not already declared a salary or dividend? If so, you probably need to do some tax planning. Now, the other question is, if this is your first year, do you have income from other sources? Oftentimes in your very first year, you might have salary that covers 6, 8, 9 months of the year from a full-time employment, in which case, even if you've taken money out of your corporation, you may not want to declare the money you've taken out of your corporation in this calendar year, meaning the 2024 calendar year. And with a corporation, you have a little bit of flexibility in declaring a salary anytime throughout your calendar year. So if you have a July 31st year end, let's say it's July 31st, 2024, you could declare salary, anytime from August 1st until December 31st, 2023, or you could declare salary anytime from January 1st to July 31st, 2024. And in fact, there's a special rule that allows you to declare a bonus up to just over 6 months from your year end. And what that means is that you could declare salary all the way until January of 2025. So if you had a July 31st year end and you'd taken money out of your corporation, but you had other income for other reason, and the money that you took out of your corporation, you would have the option of declaring that in 2025 instead of 2024. So if you have income from other sources, you've already made use of the basic exemption and the low tax brackets, then you may wish to defer this planning. And then, of course, the other question is, have you already declared income from your corp in the 2024 year? So again, let's imagine that you had a fiscal year end of July 31st, 2023, and you had actually bonused salary into 2024. You might have just bonused, a small amount because maybe your planning that you had done was slightly off and you hadn't accounted for all the money that you withdrew from your corporation. So you declared that additional amount into 2024. Well, you likely want to top that up and make sure that we're declaring additional salary for you in 2024. So we would definitely need to know if you've taken, we definitely need to know the questions that I'm going to go through with you in just a second. And now if on the other hand, you had declared a large salary, like, $150,000 from the 2023 year, and let's say that you had a December 31st, 2023, and you'd taken all of your salary and pushed it into 2024, you may not want to declare any additional salary in 2024. What you might have is this rolling bonus forward method, where for the 2024 fiscal year end, you're going to bonus again into 2025. For the 2025 year, you bonus into 26, et cetera, et cetera. So those are the questions you need to know to determine if this session is even relevant to you. If you have answered any of those questions or just curious and want to stick with us, hang around. We got lots of meat to go through today. So assuming that you do need to do some tax planning for 2024 year end, we want to figure out, how do we figure out what is the right amount of salary to declare, and therefore what is the right amount of taxes that you're going to need to remit to the government. So we're going to ask you a bunch of questions. And this can be done either over the phone with your account manager. If this is your first year, it might be easier for you to just do this with a phone call. Now, if you've been with us for a number of years, you've seen the tax form, which I'm going to, or the payroll remittance form, payroll calculation form that I'm going to share with you guys in a second. And the advantage of that is that just makes it a little bit more efficient for our team to be able to go ahead and calculate those and get those over to you as fast as possible. The more efficient we are, the better it is for you, obviously. But if you want to meet with your accounting team, no problem at all. Happy to do that and meet with you to go through these questions. But if you find it easier to just go through and fill in the questions in this form, we can do all the tax planning based on that. But that's because we're going to ask you a bunch of questions like, how much money have you withdrawn from your corporation since your last corporate year end? How much money have you or will you contribute to your RSPs? Because this is going to go into our tax planning. Do you have a target net income? Do you have any family members that you'd like the income split with? And are you planning to take this income in dividends? And that translates into this form, if I can find it, which is our tax planning worksheet, which many of you who signed up for this webinar received an email from us with a link to this tax planning worksheet. In this, we will ask for your company name, your email address, and a lot of this will be pre-populated. If we have data from previous years, a lot of this will be pre-populated. We do need to know whether you would like us to prepare the T4s for you, or if you're going to prepare it yourself. This just helps us to better plan and scale for the T4 season, which will, your T4s need to be filed by the end of February. The source deduction payment will be due much sooner than the actual T4. But we would like to know whether you want us to prepare this or not. So it'd be really helpful if you can tell us whether you want us to prepare the T4s and or the T5s for you. New question on the T4 that started last year is whether you have access to any dental care insurance or coverage. And if so, is it only the payee? Is it the payee and the spouse and the dependent children? Is it the payee and the spouse? Is it the payee and the dependent children? And this is because of the new government programs that subsidize dental care, which most of our clients wouldn't even qualify for, but we do need to answer this. So please appreciate it if you could help us by clarifying that question. When it comes time to T4 season, if for those of you who have not answered that question, we're going to be sending a follow-up where we will need this question answered in order to prepare the T4 for you. Next, again, how much money did your business earn, gross revenue side? How much money did you spend on business-related expenses paid personally by your personal bank account or personal credit card? So this is, we're trying to figure out, of the money you took out, how much of that was used for business expenses? Because we only have to account for the net. So if you've taken out 100,000, but you use 20,000 for business deductible expenses, then we have $80,000 that we need to account for that will become either salary or dividend. And then we'll look into what kind of income splitting options we have. And how much did you take out of your business in the form of director's advances? How much money has your company already paid toward 24 payroll taxes? So again, if you've done some tax planning already, or if you have a payroll software that is maybe taking a basic amount, but you're needing more money over and above what you're declaring in your payroll software, we would like to know how much money that you have already paid to the CRA. Then some basic information, your date of birth, your RSP contribution limit, the RSP contributions that you've made, other personal income that you have from outside the corporation. So again, if you have money that you've earned from full-time employment, this will be helpful in our tax planning. Other personal deductions that you might have, like childcare expenses, those types of things. That's helpful in just figuring out the actual amount due. Doesn't truly affect the tax planning as much, but helpful for figuring out how much that you've got to pay, because we can account for those and give you a lower remittance amount because we know that you're going to have childcare expenses or RSP contributions. And then when we do our calculations, we'll give you a lower amount to pay. If you don't give us those numbers and you have those deductions, what will happen is we'll give you a higher amount to pay. You'll pay your source deduction amount based on that higher amount. When you file your taxes in April, the CRA will reconcile what you paid and the fact that you have these other deductions, and therefore you're due a refund. We're going to ask for similar information for your spouse. So we need their first and last name, their date of birth, their RSP contribution limits, and any other personal income that they might have from outside the corporation or personal deductions that they have. Again, we're looking for the number of children and the number of children over 18 and names, date of birth, and social insurance numbers, again, helping us from a tax planning perspective. And then lastly, your sole proprietorship name and sole proprietorship start date if you have any sole proprietorship income. So that is helpful for us, again, just to getting a feel for what we have to account for. So a lot of these fields will come pre-populated, and only the fields with a star are actually required pieces of information. So there's some information that is just helpful but not required, like all the spouse information and family details and sole proprietorship information. But the answers to these questions are really the critical stuff that we need in order to do the tax planning. And again, if you're struggling with this form, finding it difficult or complicated, feel free to reach out and book 15 minutes with your account manager. And effectively, they'll go through these questions with you, complete the tax planning form with you on the spot, and send you the source deduction remittance calculation. Okay, so if there's any questions about that, please feel free to post them in the chat. If there's no questions about that form, I will continue on to the different types of remitter types and their associated due dates. So the remittance due dates, as I said earlier, are always based on when they're received, but they're also based on when an employee is paid. So the due dates that you have to pay them by is based on when you paid your employees. And so this is often causes a bit of confusion because clients will get these reminders from CRA saying, hey, you paid us last month. Why haven't you paid us this month? And really the short and simple answer is because I have no employees with any eligible remittances during this period. And I do see one question, so I will go to that and then circle back here from a second. On the forum, the date fields user experience is a little clumsy. I'm sorry about that. Unfortunately, we are somewhat limited. It is a Keep, or formerly Confusionsoft form, which is the CRM that we use. So we are kind of limited to their UI. I'm sorry if it's clumsy. I will forward that as a request to make those a little better, but unfortunately, there's not much I can do about that. My apologies. So with these remittance due dates, again, as I said, they're going to be based on when you pay your employees. So if you only pay your employee once a year, let's say December 31st, you only have remittances due once a year, no matter what remitter type you are. And we're going to talk about the remitter types in a second. But what you are required to do is to notify CRA that you have no eligible employees with any eligible source deduction remittances during those periods. That can be done with a PD7A form, or it can be done online through your CRA representative portal. If again you're struggling with that, you don't know how to do it, you can reach out to your account manager and they can process that for you. But typically you'll need to do that if you're only doing your payroll remittance once a year. And so let's say that you're making a payroll remittance in January. You'll want to file that, before February of the following month, so you don't get those reminders. If you do get those reminders, it's not the end of the world. We can again just go online and tell the CRA, nope, no employees with any eligible remittances during that period. If the due date does fall on a holiday or a weekend, it's not actually due to the next business day. So you have till Monday or potentially Tuesday if Monday is a holiday. However, if your business does go bankrupt or stops operating, i.e. you're dissolving, you must remit your source deductions to your tax center within 7 days following the closure or the bankruptcy of your business. Now, most of the time when we dissolve the corporation, there's not usually an additional source deduction remittance, but there could be. And if you are doing that, just be aware that you will have some issues there as far as timeline. Now, if you want to figure out what type of remitter you are and what your actual deadlines are, you have to look at something that CRA calls your average monthly withholding amount. And to make it even more complicated, you're looking at your average monthly withholding amount from 2 calendar years ago. And again, this is why we err on the side of caution, and we're going to always tell you the most conservative date, which is going to be the 3rd day following which you have paid your employees. So that's a threshold 2. So threshold 2 is someone who has an average monthly withholding amount of over $100,000, and that would be due on the 3rd. Now, for our clients, since most of you are paying only once a year, your average monthly withholding amount is the amount that you're making as a remittance to the CRA. So most of our clients usually actually fall on a threshold 1, which means that you're due on the 10th day of the following month in which you're paying your employees. Now, if you have an average monthly withholding limit of less than 25,000, you have until the 15th. And in fact, if you are a new remitter, meaning that this is your first year of operation, because the average monthly withholding amount is based on the average monthly withholding amount from 2 years ago, for the first 2 years, you will be a regular remitter. So actually, in the first 2 years, you have until the 15th of the month following which you are paying your employees. Now, as you notice, I keep saying the month in which you've paid your employees, because as I said earlier, you can pay your employees any single month that you want, and what month you're paid on is determined based on what your fiscal year ended. So if it's after July 31st, we're almost always going to declare that as a December 31st remittance, and then that would be due by January 3rd. Again, if we're also grossing up or adding on to something for a fiscal year end that is maybe next year or that hasn't come yet, we're going to choose a December 31st or December 31st deemed payment date to your employees. And that's done with the minutes that we do as part of your corporate year end and your shareholders resolutions. So that would be declared as December 31st. Therefore, we are going to tell you to pay by January the 3rd. So all this tax planning that we're talking about here, we are targeting a January 3rd deadline. So we do have another question that's come in here, which is, can we get a link to the form here? Yeah, I will drop that in the chat in a second. However, the link, if I drop a link in the chat, that link will not have your unique customer ID. So it's not going to pre-populate it with any information that we already have in our CRM. The best thing to do is to actually look at the email that we would have sent out to our clients and use that. But I will drop that in the chat before we go before we end here. Or Kasim or Rachel, if you're in our audience, maybe you could drop that in the chat for me. Thank you. So we've talked about threshold 2, threshold 1, and regular remitter. We haven't talked about a quarterly remitter or associated corporations yet. So the quarterly remitter, if you happen to have a average monthly withholding amount of less than $3,000, you're eligible to remit quarterly. Again, the key here is that if you are paying your salary only once a year, the monthly requirement is only required in the months in which you're paying your employee, which means you're only required to pay once a year. So even though threshold 1, threshold 2, and regular remitter requires monthly remittances, it only requires monthly remittances in the months in which you have paid employees. And if you're doing this as an annual bonus that's done through minutes and resolutions of your shareholders, that means that you're only paying your employees once a year, and therefore you only need to make a remittance once a month or once a year, even though you are a monthly remitter and filer. Now, the other thing to be aware of is associated corporations. So if you have opcos, holdcos, or other associated corporations, then what happens is the average monthly withholding amount is calculated based on the combined average monthly withholding amounts of both corporations. So again, we always err on the side of caution, and we're going to always tell you based on a threshold 2 to pay by the 3rd date. We strongly encourage that. There could be reasons with your bank or payments or issues like that. So if you just, plan for the worst and hope for the best, you'll always be in a better situation. And that's what we do for our clients. We always tell you to pay by that earlier date. So even if your combined average monthly withholding amount falls on the 10th or the 3rd, we've told you to pay by the 3rd anyways. So let's say that your average monthly withholding amount for the combined version brought you over the $100,000 limit, whereas without it, it was less than that. We're going to tell you to pay by the 3rd anyway, so you should be fine. So let me just mark this question live and let's go on to some more things. So the new remitter type, as I mentioned earlier, so I sort of covered this slide already. Um, New remitters in your first year or first 2 years, you're going to be considered a regular remitter. So you've got that 15th deadline. Now, interestingly enough, we do not create a payroll account for our clients when they incorporate with us. And that is because as soon as we create a payroll account, CRA is going to be expecting payroll remittances and you're going to get unnecessary attention. The payroll account can be created very, very easily, either through your CRA portal, by calling CRA, or by simply making a payroll remittance. So if you go to make a payroll remittance online through your bank and you make a payroll remittance using your business number followed by RP0001, it will automatically create a payroll account for you without you needing to contact CRA and being on hold or trying to figure out their CRA portal. But if you wish to make a payment in person at your bank, which will count as the day you make the payment as opposed to online, which you'll need that additional day, or if you're going to mail in a check, for those of you who are still using checks, then you will need a copy of a PD7A form. And the PD7A form is mailed to you by CRA. It's not something that we can recreate or print for you because it is specific to your business number. And CRA will send this form to you only after your payroll account is created. And then they will send it to you every at least quarter, if not every month. So if you need to make a payment at your bank or you're mailing a check, you will need a copy of that PD7A form. And in order to get that, you're going to need to create your payroll account. So if you're planning to pay at the very last minute through your bank, go and create your payroll account now. Otherwise, if you plan to pay through your bank, you can rest assured that it will be created for you the day that you do that. And again, because this is your first year and we're telling you to pay by the 3rd, if you make that payment online through your 3rd, even if you have troubles, you've got another 12 days to figure out the problems that you're having, but usually it's pretty straightforward. So the options for making a payment is through online banking, which is our recommended way of making a payment. When you do an online banking, usually you have to go, usually under Pay My Bills, there's another section for the tax center or something like that. Depends, it's different from bank to bank. And then you go to that section, you find payroll remittance, and then you're going to use the PD7A form. It's going to ask you for the number of employees, the gross payroll, and the payroll remittance, which will all be on the form that we give you when we calculate your remittance amount. So we'll give you all those details. But you will need that information. And as I said earlier, that online payment through the bank is the same thing as a PD7A. And so you don't need to submit any additional documents. If you are doing a My Payment through the My CRA account, then you will need to fill the same information. You'll need to log onto their site. You will need to have created that payroll account already. And it's also limited to Interact e-transfer. If you're doing that, limited to $3,000. There are some abilities to pay online. However, there is, I think it's Plastique is the carrier that they use. There are some charges associated with that. So I know we've had people question this before in the past that, hey, can I pay with my credit card and get the points? The fees are going to be more than any points that you get. So it's not really worth it to do. Got another question coming in here. Can we pay CRA, RC, RP, RT, RZ late dues using a credit card? Didn't think that was allowed till now. Wow. Yeah, I believe you can do that with Plastique. Again, I don't recommend it. Never really recommend paying by credit card unless it's your only option. And I don't know off the top of my head. I might ask Rachel in our audience to know if you can do late fees as well. I believe you can, because I think you can do any payment now through Plastique. But I'm not 100% positive, so I don't want to answer definitively. You can do a pre-authorized debit with CRA. You can pay by credit card, PayPal, or Interact e-transfer. You can pay by check, which can be done either at a financial institution or through Canada Post. However, for this, you will require the PD7A form. Again, the benefit here is it will be considered paid the day you drop it off at the post office or the day you go to the bank and make the payment. So that's one of the advantages of doing that. So if you are right up against the gun, that is an option. But the key here is you need to have that PD7A form. Now let's talk about what happens if you miss that deadline or you don't deduct the right amount. So the CRA penalties for payroll source deductions are one of the highest penalties that are out there. And that's because from the CRA's perspective, this is money held in trust by the corporation. So they're used to, arm's length employee relationships where you have employees who are not related to you, who you are taking money off their paycheck. You're taking money out of their paycheck and holding on to that. And if you don't remit it to the government, you've effectively stolen from your employees. And CRA takes that very seriously. And so the penalties are quite high associated with that. So if you were even a minute late on your payroll remittance, so if it's due on the 3rd and you pay it on the 4th, there will be a 10% penalty on the amount of the remittance. So one of the loopholes that we do have is employees are allowed to tell their employer, hey, look, I've got RSP contributions, I got childcare deductions, I've got these other expenses, so I don't want you to withhold any taxes. So that is allowed, but the employer must always, no matter what, withhold and remit the CPP and the EI. So if you're going to be late, and again, most of our clients being exempt from EI, means you want to just remit the CPP for both the employer and the employee portion and remit that. You probably don't want to remit the full tax amount because you will be hit with a 10% penalty on the amount that you remit. There are additional penalties for gross negligence. There are additional penalties for gross negligence. So if you fail to deduct the right amount or you pay late more than once in a calendar year, CRA has the option to apply a 20% penalty to the second or later failures. If the user made knowingly or under circumstances of gross negligence, which really the bar for gross negligence is far lower than it should be. So you could be hit with a 20% penalty if you're late more than once. So again, it's really, really important to make sure that you're calculating the right amounts and that you're making your remittance on time. Now, as far as whether you have made the right amount of remittance, even though you enter the gross payroll and the number of employees and the remittance amount, that's not actually what CRA is using to determine if you've made the right remittance amount. What they're going to use is the T4 that gets submitted at the end of the year. So if you've only remitted the CPP and I prepare a T4 that says the employer has withheld CPP and payroll taxes, then you're going to be hit with a penalty because you haven't paid enough. Now, if I prepare the T4 and say the employer only withheld the CPP and you only paid the CPP, there's no penalty associated with that. Now, again, no matter what, the employer must withhold the CPP. So if you haven't made any payment at all, you're going to be hit with at least a 10% penalty on the CPP amount, which could be $700 or more, right? So it's, again, very important to make sure that that's done. There are some additional penalties for not filing your T4 on time. That's now only $100, which is very, very modest. We used to have some workarounds for when it was a lot more expensive than that. But the late T4 is not so much the issue. It's the payment that's critical. And again, if you haven't made your payroll remittance on time, probably important to have a conversation with your account manager about how your T4 is going to be prepared to minimize those penalties. Now, let's say that you have made a payroll remittance error. You've either under remitted or over remitted. So as I said earlier, we can simply adjust the T4 as long as the under remittance is, still covers the employer and employee portion of the CPP, then we're fine. What we'll do is we'll simply adjust the T4 to reflect the amount that was actually remitted. When you go to file your personal tax return in April, you're going to have a T4 that shows that you withheld the amount that you remitted to the government, which is less than what's actually owed on the amount of salary that you have. And therefore, you will owe money when you file your tax return in April. On the flip side of that, if you have over remitted, you will get a refund when you file your tax returns in April. Now, that is typically the best way to handle it, because if you have over remitted and you want to get that money back, there is a process. It is a lengthy and difficult process in dealing with CRA because they're not very eager to give that money back. Again, because they believe it's money that was withheld and it was held in trust and then remitted to them, and they believe it's entitled to the employees. And it can get difficult to prove that no, there wasn't actually any employees with any eligible remittances during that period. And it's going to get you a lot more attention than just, filing the T4 with the over remittance and getting the refund. Now, if you have made a payment and you have made it on time, but it went to the wrong account, like let's say it went to corporate tax or GST or the wrong year, then we will need to contact CRA. This can be done either through the CRA portal or it can be done with a phone call. And the good news is CRA will deem that payment to have been paid the date that you made the payment, not the date it's reapplied to the correct account. So if you made the payment on time, but you didn't notice until after the deadline, don't fret. It's easy to sort out. You can do that by just going to the CRA site and transferring the payment. Once the payment is transferred, it will be considered to have been paid the date that you made the actual payment, not the date the transfer was made. So that's the good news there. Now, what are your next steps and how can we help here? So the next step is to either complete your personal tax planning form, which we've shown you earlier, or to book a call with your account manager to discuss your individual tax planning. And based on that, we will complete a tax plan that we will send over to you, which will include the gross payroll, the number of employees, and the total remittance amount that you'll need to make. And then you'll need to go and make that remittance accordingly, and either fill in that information about gross payroll, number of employees, and total remittance amount, either in the online banking portal, through the CRA portal, or in your PD7A to be accompanied with your payment at a physical bank or at a post office. And that's really the end of our session. I do want to open it up for any Q&A. If you are not a client and you have more questions, like to book a free no obligation consultation, feel free to scan the QR code to go directly to our free consultation form. You can also check out our website where we've got a lot of free content. You can also reach out and call us at 1-800-465-7532 or email us. Anyone who knows me knows I personally hate email, which is why we have our own internal communication portal. And you can follow us on social, where this is streaming live right now, hopefully, and where we're always putting out new, fresh content. So again, thank you everyone for joining us today. If you do have any questions, I'm going to stick around for a few more minutes and answer those questions. Otherwise, I'm going to wish you a happy Tuesday and have a great day. Okay, it looks like there are no questions. So I am going to say adios.